Okay, so I'm starting the recording now. Tunde and Samuel, welcome.
Yeah, thank you.
Okay, so that we don't waste too much time, we just have a few minutes to run through what we have here. So today we're going to be looking at I'm still coming back to this dual time zone trading. I'll still come back to it. Let me explain a few things before we get to that. I think if I explain it now, I'll still need to explain it further down the line. So let me just explain, let me go into support and resistances and trend lines before we now start looking at dual time zone trading. Now, you remember that I had already mentioned that for the candlesticks, each candlestick represents activity in the market for a certain period of time. And there are some default time frames that your broker is going to give you. The highest of the time frames is usually monthly. That is one candle representing the whole activity of the market in 1 month. And the lowest time frame, I'm sharing my screen now, the lowest time frame that you are most likely going to get from your broker is 1 minute. What you are seeing on the screen now is the monthly chart for gold. That means that each candle that you see here, let me zoom in for the time being, each candle that you see here represents 1 month. The black bars are months that gold went up in price, and the white bars are where gold went down in price. But you can see, looking out, if you zoom out, you can see that between September 2015 and the present month that we are in now, which is April 2020, you can see that gold has been kind of like moving sideways. I don't know if you guys can see that. If you look at the few months before that, you can see that there was this steady downward trend for gold. Since May 2010, gold has been going down gradually. But since 2015, you can see that it's going up and coming down, but it's staying within a tight range. I hope you guys can see that. So that now takes us into what we call support and resistances. This is a very, 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 I cannot emphasize how many varies. This is a very critical part in Forex trading, support and resistances, because the market always respects support and resistance. No matter what is going on in the market, when the price gets to a support or when it gets to a resistance, something must happen. Now, going back to our candle formations, our candle patterns that we did earlier, I told you that when you see those things occur at a support or a resistance, is usually more powerful, is usually more significant than if you see it happening anywhere else. So what is a support? What is a resistance? Now, a support is a base, let me say, is a lower value, is an area, a price area that anytime price is coming from an upward, it is coming down and it gets to that support, it goes back up again. Price is coming down, it gets to the support, it turns back. It goes, does some other things, comes back again, gets to that support, it goes back up again. It's a price region or a price area that the market finds it difficult to break through. The reverse is the case for resistance. That is, you have the market, you have your resistance up here, the area. The price is coming up, gets to the resistance, finds it difficult to break through the resistance, and then turns back down. It comes back again, gets to that area, finds it very difficult to break the area. It turns back down again. That is support and resistance. And the more you study charts, the more you try to familiarize yourselves with things regarding Forex, things regarding trading, very quickly you'll be able to spot support and resistances yourself. Because just looking at the chart alone, you will see, okay, let's look at this gold chart, right? Let me give you an example. Can you see the crosshairs, that white line that are moving around? Can you see where it is presently?
Yes.
Okay, sorry, we are looking at silver, sorry, not gold, silver.
Okay.
Now, you can see the horizontal line from, this is December 2015. Starting from there, going across. The price is at $13.53. You can see that at this point, when the price was coming down, let me put a permanent line there. Okay. You can see that red line. You can see that the price was coming down, it was coming down, there was that steady downtrend. But when it got to that region, that area, it turned back up. And then it came again, and then it got to that region again, and then it turned back up. We can see again that it got to that region. In fact, even went below the region, and then it turned back up. This present monthly candle that we are in, we can see that it has changed direction. It's going back up now. This is a very, very, very simple, clear illustration of what a support is. Like I said, the more you begin to familiarize yourselves with charts and everything, you begin to see it everywhere. Once you just open your charts, the first thing you need to identify is your support and your resistance. Once you have identified your support and your resistance, you now try to find out where the market is heading to. If a market bounces off okay, let me use this analogy, right? Let's say you have a multi-story building. Let's say maybe a 10-story building. Your price is a bouncing ball. You have a ball that bounces. If you throw that ball at the ground with a lot of energy, it will hit the ground and then it will go back up. It will bounce back up and hit the roof. If it doesn't have enough momentum to break the floor, it will bounce back up and go towards the roof. When it gets to the roof, if it doesn't have enough momentum to bust through the roof, it will do what? It will turn back and it will go down towards the floor. And if it doesn't gather enough momentum to break through either the roof or the floor, it will just keep going up and down between those two levels. The floor being the support, the roof being the resistance. But let's say something happens. Let's say there's a financial, there's a financial activity that happens in the market, some macroeconomic news that came out, maybe there's a lot of inflation in the country or blah, 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 different things that now gives the pair enough energy to bust through the roof. Let's say it now becomes very bullish. It now busts through the roof. You know that we're in a multi-story building. It's on the ground floor. Once it busts through the roof, it now goes to the first floor. The first floor has its own support. its own resistance. So it will now continue to play within the support and the resistance of the first floor. If it does not have enough energy to go to the second floor, it will remain in this first floor, and it will just be going up and down, up and down. It will hit the roof, it will come back to the floor. It will hit the roof again, come back to the floor. But if it now gets enough momentum again, based on some other economic activity, and then it now gathers enough momentum, when it hits the roof of the first floor, it moves into the second floor again. If it doesn't have enough momentum to move to the third floor, it will just continue going up and down in the first floor, in the second floor. Conversely, once it has been in the second floor for a while, let's say another economic activity happens that now makes the pair very bearish. Once the pair hits the support, it busts through, it comes down to the first floor. You know, it has left the second floor now, it is back to the first floor. It will now be going up and down, up and down, up and down between the support and resistance of the first floor. And let's say it gets bearish again, busts through the support. When it gets to the first floor, it will just be going up and down in the first floor. That is support and resistance. And the market respects support and resistance. So if you are able to properly identify the support and resistance in the market, all you need to do is, when the price gets, you just wait on your hands. When you see the price approaching a major support or a major resistance, you now check what is happening. Does it have enough momentum to bust through the support or bust through the resistance? Or is it that when it got to the support, when it got to the resistance, it turned around? If it turned around, that's a good place to place a trade. You now enter the trade. Let's say if we're looking at silver here, although at this point, right, the market might have not been a support at this point because it just created that new low. But when it retested the low here, can you see something interesting here? Remember that we have done candlestick patterns in the past. Can anyone identify this candle for me? You can see this is one of the candles we have talked about previously. You can see that candle forming at a support. And what happened next? The market went bullish. This is a hammer, is it not?
Yes, it is the hammer.
You can see a hammer occurring at the support. This is also, is it morning star or evening star? Let me confirm. And like I said, if you see, sometimes some of these candlestick patterns, they will happen 1, 2, 3 together. You see different candlestick patterns forming at a support or forming at a resistance. Is a very clear indication that the market wants to turn around. You can see it's a morning star. You can see there was a bearish candle, a small little doji, and followed by a bullish candle. So you have your pin bar, your bearish candle, your pin bar is already a reversal sign. You have a bearish candle, a doji, followed by a bullish candle, and you can see market went up from there. So you can see how we are now combining different ideas together. We have the candlestick pattern. You now have your support and resistance. When you put the two together, it gives you a trade. And we begin to see that because very soon now we'll start entering the dynamics of placing a trade, how to enter a trade, how to know when to enter a trade, your stop loss, your take profit, things like that. So this is just a good example of placing a buy trade at a support. Now, let's look at resistance, right? Because if there's support, there's also resistance. We have a resistance also on this pair, but is not as significant, let me say, is not as significant as the support. Now, something I need to mention, right? whenever market breaks through a support or a resistance, whenever the market breaks through a support or a resistance, it the former support now becomes a resistance. Or if it breaks through a support, that support becomes a resistance. Like I said, the multi-story building, once it breaks the roof of the first floor, that roof of the first floor now becomes the support for the second floor. Are we getting that?
Please come again. Please come again.
If the market, if the price breaks through a support, let's use the analogy of the multi-story building, right? You're on the first floor or you're on the ground floor, and the price, like I said, is ranging between the ceiling and the floor. But it gathers enough momentum to now break through the ceiling and is now on this first floor. You know, your roof of the ground floor, the roof of the ground floor is now what will become the floor of the first floor.
Yeah.
Mm-hmm. So whenever price breaks through a support, let's say it's going down, breaks through a support, that vertical support, now that vertical support now becomes resistance anytime the market is coming back to it. You know, because it goes through, it now starts trading within this region. So anytime it now comes up and gets to this place, that former support now becomes a resistance. This is a very good example. Like I said, once you guys become more familiar with it, it will be very easy for you to identify. Still on silver, you can see market was coming down, now got to this level. You can see at this point, this level offered a resistance, a support to the market. You can see it got there, price turned back up, came back, price turned back up, even hit it the third time, price turned back up before finally breaking through. So we can say that this area is an area of support to the market, right?
Yeah.
Going further down, right, this same area that offered the market support, you can see that that same area is offering the market resistance now. It was a weak resistance here, although market closed above the resistance, but still now the very next candle closed below the resistance again. And you can see back here is offering resistance to the market again. This is the former support. It was a support at this level, at this period, but when it got here and here, it now became a resistance. Is that clear?
Yes, it is.
Okay.
To me.
So we have seen support, resistance, how it works. Let's just look at something else. I like to use gold for this because gold, silver, most commodities, because they are very good when it comes to support and resistance. So what I'm going to do, the assignment I'm going to give you guys today is I'll just draw some charts, or I'll tell you the time frame and the time frame, and I'll ask you to just draw your support and resistance and maybe screenshot it and send to me. Can you see the resistance here on gold? We're looking at monthly. You can see price got to the resistance here, fell, came back here, fell, got here, fell, until price now finally broke through here. And then after it broke through, it started going upwards. We're looking at monthly. So let's look at weekly. The higher the time frame you are in, the stronger the resistance is. Anything you are doing on Forex, the higher the time frame, the more significant it is. The lower the time frame you go, the less significant it becomes. Although it still doesn't mean it's not significant. It just means that it's not as significant as it's happening on a higher time frame. Now, if you look at monthly, you won't see any resistance or support around here, around this region. But when you come to weekly, you have come to a lower time frame. Immediately, you can see that there is a support here. Are you guys seeing it? Market came and touched this point, went up, came back, touched it again, and went up. So it is acting as a support to the market. Let's go further down. Let's go to daily. If I zoom out on daily so that you guys will just see that, yeah, we're still working with the same chart, right? So if I zoom back in on daily, sorry, let me zoom out again. If I zoom out on daily, I'm beginning to see even more support and resistance. Can you see there's a resistance there? Market went bullish all the way to this point, was rejected by this zone, rejected by this zone again. Now, remember I told you that support usually turns to resistance once the market has broken through. And you can see that the market now broke through this resistance. And then the resistance turned into a support for the market at this period. And you can see, again, you can see doji, you can see spinning top, you can see hammer. Three separate candlestick formations at a support. And what should you expect? The market went up. So you see how we can now start combining those ideas together to now start forming trades, to now start knowing where the market is going to. So it's a little bit technical, yes, but it's not exactly rocket science. You don't need to be over smart or over brainy for you to be able to spot some of these things. We have our support, we have our resistance. Market is at a support. You see doji, you see spinning top, you see hammer. The next thing is for the market to go up now. It's straight. I don't want to make it look as if it's very easy, but it's something that with time and practice, you begin to spot it very, very clear, very, very quickly when you look at the market. So that is support and resistance. It is still a little bit deeper than that, but I want you guys, this is what I want you guys to take away from here. Maybe with time, we can still come back, because even at the end of this training course, I will still from time to time still like us to come together and look at some ideas. But I don't want to give you guys something that will be a little bit too complex that will now start confusing you. I want you to gain the necessary knowledge, necessary skills that you can use to necessary knowledge and necessary skills that you can use to at least trade and trade profitably. So we're looking at daily. We've already seen support and resistance. If you come down to 4 hours, right, you can even see more support and more resistance. You can see one here. Market got here. Market was rejected by that level. Market was rejected by that level. And we can see some rejection happening at that level again. Seems as if Tunde has a question. I'm trying to unmute him.
I think I've unmuted myself.
Okay.
Yeah. My question is the support and resistance.
Yeah.
Are we the one to set it ourselves, or the chart set it for us?
No. You are the one to set it yourself. You are the one to identify the support and resistance by yourself.
Okay. So how do I do that?
That was what I said. I said with time, you will begin to see it more clearly. You know, I've been doing this for a while, so I can easily spot it. But it's the support and resistance level, right, is just any area, any price area that market is finding it difficult to break through. It's going up, it's going up, going up. It gets to a level, it's unable to go past that level. That means that that level is acting as a resistance. Or it's going down, it's going down, it's going down. It gets to a point, it's unable to keep going down again. That means that that area is a support. So anytime that you notice that first time it got to this level, it couldn't pass. Second time it got to this level, it couldn't pass. There must be something at that level. Do you understand? So you can now visually use that to calculate your support and resistance. Let's just look at the chart again. You can see that price was going up, going up, going up, going up, got to this area, couldn't go up again, came down a little bit, went up, got to this area again, couldn't continue. That means that there's something happening at that area now. So you can now just put your line and say that, okay, this area or this value is a resistance. And you can see this is 15th of April. Since 15th of April, price has been going up and down. But when it got back to that level again, that was yesterday and the day before. When it got to that level again, it met a brick wall. It couldn't pass that level. That is how you identify your support and your resistance. Although you need to go, like I said, always do your analysis from the top down. Start from the monthly, go to weekly, go to daily, go to 4 hours. I don't advise you go below 4 hours. Set your support and resistance. So when I come in on Monday, right? Okay, let's even look at what happened on gold on Friday. We can see that at this resistance, you can see there's a spinning top here. You can see that there's a hanging man. You can see there's a evening star. You can see that there's another spinning top, followed by a bearish engulfing candle. You can see that this candle takes out 1, 2, 3, 4, 5, 6, 7, 8, 9. Takes out the last 9 candles. That's a bearish engulfing candle, which signals to me that by the time market opens on Monday, gold should start coming down. It's not automatic like that, although we'll still get to some other higher level, but just going by this alone, we should expect at least early next week for gold to come down. You can just keep an eye on gold, watch it on your chart and see what happens. So Tunde, I hope that explains your question.
Yeah, thank you.
Okay. Now,
sorry, Sami.
Yeah.
Now, when with this last one you talked about the bearish engulfing.
Mm-hmm.
Now, beside it directly, you have something like a Marubozu.
After it.
Yes.
Yes. Yeah.
And that Marubozu looks bullish.
Bullish, yes.
So how does that affect that combination there?
Yes. Now, fine. Now, the Marubozu or whatever it is called, depending on what accent you want to use. Now, it just means that the, how will I put it now? Okay, it's indication of a bullish momentum in the market, but it doesn't actually mean, it's not a reversal pattern per se.
Okay.
It's not a reversal pattern per se. It just means that there was a strong bullish move in the market, or there was a strong bullish surge during that time period. Most of the candles I've identified are candles that indicate reversal.
Reversals, okay.
The Marubozu itself is not a
direct indication.
Yeah, it's not a pattern reversal candle per se. But
okay.
Like I said, there is a lot of argument for gold to continue buying next week. We haven't gotten to that yet, but just based on support and resistance and candlestick patterns, we can expect gold to fall next week. There are some other factors that might not allow it to fall, but I don't want to talk about that since we have not gotten there yet.
What's in there? Okay.
Okay, so
Thank you.
That support and resistance, that's horizontal support and resistance. Earlier this morning, I mentioned diagonal support and resistance. Now, this one is a little bit more tricky, and it requires you to be, how will I say? It's just something you need to practice. Practice makes perfect. Let me give you an example. Okay, we are running out of time. Let me try and make this as fast as possible. Now, just note this down. There's what we call swing high, swing as in a children's swing, swing high, and swing low. What is a swing high? What is a swing low? A swing low is when the price is coming down, and then gets to a point and turns back up. The lowest point where it turns back up is what is called a swing low. Now, if the market is going up, gets to a point and turns back again, that highest point is called the swing high. So when you are connecting either support and resistance or trend lines are your diagonal support and resistance. When you are connecting them together, it is always a rule of thumb to connect either swing low to swing low or swing high to swing high. So as I did here now, you can see that this is a swing low. The market is coming down and it got to this point, it turned back up. That is a swing low. Market is coming down, got to this point, turned back up. That is another swing low. You have another swing low here. You have another swing low here. But when you are drawing your trend line or you are drawing your support and resistance, it's kind of like, what's this stuff? Physics or chemistry practical. You look for the best line. It's not necessary for you to join all the lines, but you just look for the best line connecting swing low to swing low. Let's look at swing highs. You have a swing high here, you have another swing high here, have one here, you have one here. Now, is there a line that can connect all these swing highs together? Let's try and see if we can make one line that can connect those swing highs together. So you can see, this is one trend line, this is another trend line. And the trend line acts just like support and resistances do. But now it acts on it at an angle. So you can see this trend line. You can see that anytime the market touches that trend line, there is a reversal in the pattern, just like we have in support and resistance. So trend lines act pretty much like your normal support and resistance is just that trend lines act at an angle, not in a straight line. If we move back to gold on weekly, you can see there's a swing low here, there's a swing low here, there's another swing low here. If you can get a line to connect those swing lows, you now have, okay, this will not connect, you won't be able to connect all three. You now have, sorry. You now have your trend line here. And you can draw there are some guys, when you see them doing analysis, they will draw so many trend lines. You can still draw another trend line here. It doesn't matter. You can even still try and connect this is a swing high, this is another swing high, this is another swing high. You can see you can get a line that kind of like connects the three together. So if you extend that line, if you project the line, you notice that anytime the market also gets to your trend line, there will be some sort of reversal or turn in the market. So that is, I'm trying to manage time now, sorry. The next class that we have, I'll still go back into these trend lines. I'll still go back into it and we'll take it, let's say, a little bit more deeper before we now start looking at indicators. Before we now start looking at dual time frame trading, identifying the trend in the market. You know, right now we've just been doing support and resistance. The market going between support and resistance. But very soon we now need to start identifying the trend in the market. The trend simply is, where is the market going? Is it going up? Like I mentioned that there are three trends. You have the bullish is going up, you have the bearish is going down, and you have the sideways, where the market is just going, it's just going between support and resistance. It's not breaking upwards, it's not breaking downwards, it's just going sideways. So the next class, we're going to look into that more deeply, trends, trend lines, and then we'll now start looking at one or two indicators. So sorry, it's getting dark here. We've been having lights for the past, we've been having NEPA issues for the past few days now. So pardon the darkness. Once I'm done now, I'm going to switch on the gen. So we have 2 minutes left. Any questions? Any questions quickly? Any questions? Okay, I guess there are no questions. So I'm going to end the.
Sorry.
Okay.
I just asked something. I forgot I was on mute.
Okay.
I was reading something on one of the books you gave us, and there was a talk about the rule of two as regards candlesticks formation and what they tend to indicate. I wasn't too clear on it.
The rule of two. Okay, can you, because of time, can you screenshot that part of the book and send to me?
Okay, and I'll put it, and I'll send it.
Yeah, you can put it on the group. Yeah.
Okay.
All right.
Yep.
Thank you very much, guys.
Thank you.
Yep.
Thank you, everyone.